consolidation time continuing in the Indian markets?
What we are seeing, Krishna, now is volatility hitting the markets, and Indian markets has been volatile for the last couple of weeks. But something that we can take comfort in is that again Nifty is managing to defend that crucial support of 19,300 levels, and now today the stock market was corrected marginally, and this was primarily due to weakness in the risk of sentiment in global equities. Also inflation has been a concern, because of which we are seeing some sort of correction over there. Nifty was down at close about 2.28% at 19,310 levels. Sensex was down 0.3%, marginally below 65,000 mark. Mid cap and small cap space also saw some correction. The small cap index was down 0.53% at 11,683, and the mid cap index was down 0.21% at 37,815 levels.
In fact, the small cap had been the outlier all this while. Ever since we've started seeing the correction in the broader markets, the small cap incidentally was one segment that continued to be in the green. And a 0.5% loss today. What does this tell us, Suyash?
So actually, Kartik, if you have seen the activity in the broader markets, they have been largely choppy. One day we see the small cap and the mid cap index rising about 0.5%. The next day we see a fall. So the traders have not really found that sweet spot as far as trading is concerned in both the indices.
So are we're still looking at more volatility in the days and the weeks going forward, aren't we?
I mean, we have Amit for that.
Yeah. Amit, I don't know. I could have asked both of you this question. You're better placed, definitely. Tell us, volatility hitting Dalal Street, bear attack on Dalal Street is what it's being described. How do you see the days going forward and the weeks?
I think the kind of sharp rally which we have seen from the March lows, the volatility had to come at some point of time. I still think that India is much more insulated from as far as the domestic news is concerned, but there are clearly some worries from China and US. And the other thing is that the liquidity has been very strong in the mid cap and the small cap space. So there is too much money chasing too fewer companies. So we are seeing some overheated sectors within that mid cap and small cap space. My sense is that this volatility would continue for at least next 2 to 3 weeks. Usually this is a very less liquid time for the US markets, because there is holidays and vacations in US, which opens after the Labor Day in September. So we'll see some more volatility happening in the markets. I think the biggest risk at this point of time is that some sort of a credit event happens in China or US, which could really rattle the markets, because right now there is a lot of profit booking happening, but there is no dumping of money which is happening. Even the FIs have been very selective in selling the stocks. But if there is a credit event happening sometime in the global markets, then we could see some more volatility and decline in the markets. Otherwise, we'll consolidate.
Amit, stay with us. Let's just get a little deeper into the markets for the day at least. The last trading session for this week, volatile week. Suyash, tell us what were the top gainers and the losers in the trade for the day?
So, Krishna, apart from metals and media sector, most sectors saw selling. Adani Enterprises, Adani Ports in today's session continued to be among the top gainers. Adani Enterprises is on a second day of rally. Even Ports, they were up about 3.68% and 3.01%. Auto stocks also saw some buying interest. Eicher Motor was up about 1.41%, Maruti Suzuki was up about 0.91%, and Britannia was up about 0.74%. Now, among losers, if you can pull that graphic up, please.
Right.
Hero MotoCorp was there. It was a top loser in today's session. It was down about 2.17%, followed by Tech Mahindra, TCS, which is because of a larger sell-off in IT stocks. So most IT stocks were trading in the red today. And as you can see, 3 heavyweights feature in the list of top losers. Infosys was another stock which is down about 1.74%. TCS is down about 1.97%. Apart from IT majors, Hindalco was another stock which featured among the losers today. It was down about 1.88%.
So this IT sell-off is again on the back of US inflation worries, rate hike worries, discretionary spending not likely to continue. Is that what is driving the sell-off in the IT stocks?
Definitely, that is there. Also, we are seeing another banking crisis brew in the US after Moody downgraded downgraded several regional banks. Fitch came out and said that it would downgrade
Another 10 banks or so.
banks, including JP Morgan and
That's
Chase.
right.
So the BFSI segment, which has been one of the biggest, bigger clienteles for the IT industries as far as enterprise tech goes. So the expectation is that the demand would not pick up once again unless those issues are sorted first.
So, Amit, talk to us about the IT sector. We've seen, none of the IT players actually being able to beat street expectations in their Q1 results just announced. And moreover, whatever discretionary spending that seemed to have kick-started again, especially the international deals being cracked by TCS and Infosys both recently, as well as HCL Tech. Is that party that short-lived?
So I think ex-AI stocks or ex-AI companies which are very heavy on artificial intelligence, IT is a tricky space to invest at this point of time. I believe there is one more quarter of earnings downgrade cycle before we can actually say that, the IT sector kind of bottoming up. And if one has to look to invest in IT sector, then it has to be, from a medium to long term perspective only. So FY25 earnings or FY26 earnings only. At this point of time, I think it's a more of a wait and watch, especially if you're in IT services, pack. So whether it is Infosys, TCS, HCL, etc. But the big money in IT over the past 6 months have been made in IT products companies, and we do have investments in those kind of companies. But the heavyweights in the Nifty, which are mostly IT services, I think there is some pain more left. And that pain can actually elongate if there is a recession kind of a situation by the end of this year, as rate hike cycle almost, we may have one or two more rate hike cycles in that way. So it can get elongated, but I think there is still at least 1 quarter of pain more there before we can say that IT services have been bottom out.
Right, Amit, stay with us.